Okay, friends. So today we are going to listen on the management interview of IOL Chemicals. The joint managing director Vijay Garg is going to throw some lights on the future business plans and how the business is going to work out.
Hi, welcome back. You're tuned into Midcap Radar on CNBC TV 18. Well, 2 days back, there was an interesting report by Spark Capital on the API industry where they said that they do not think the API growth in Q1 is sustainable for a long period of time and they cannot extrapolate Q1 performance for the remaining quarters. So to discuss this, we have Vijay Garg, Joint Managing Director, IOL Chemicals and Pharmaceuticals, joining us now. Mr. Garg, good afternoon. Thanks a lot for joining us on CNBC TV 18. Well, Spark says that they think the API growth is sustainable only for 2-3 quarters and not for a long term. What is your view? What is the situation on the ground and how is demand looking right now?
See, as far as API growth is concerned, it's not the case that it is not sustainable for the coming quarters. If I see IOL chemicals and pharmaceuticals, our growth is very much sustainable. Even other API companies where we are discussing the things day in day out. So we don't find any kind of negativity coming on that this growth is not sustainable. Yes, what is happening is since China is increasing the prices of the intermediates where India is totally dependent on Chinese supplies, there is some problem is coming. But as far as the sustainability is concerned, yes, profit on pressure on profits is there, but which we are confident that we will be able to get from the market. But as far as the sustainability of the market is concerned, we are very much confident that this is very much sustainable. Whatever we have done in Q1, we'll be able to sustain. Rather, we'll be able to do better than what we have done in Q1.
So here the management is quite confident that they're going to deliver better than Q1. Okay, so let's hope they deliver what they're promising to the investors.
So, yes, would end-use demand, which has spiked both for formulations and APIs post-COVID, not just for COVID-related treatments, but for others as well, will it sustain at these levels? Is the other question. It's a more basic question. I mean, the end demand, do you think will sustain?
No, see, general ailments like general flus, or you can say the general problems which we are facing, like post-COVID, if you see, patients are not going into the hospitals, only COVID care is happening everywhere. For that matter, yes, for the general ailments, the requirement is to have a impact, like that 20 to 25% dip is there in terms of antibiotic sales, in terms of general sales. But where the companies are in chronic diseases like diabetic, cardiological diseases, all those kind of diseases where the chronic diseases are there, their demand is not going to dip. Yes, general diseases, yes, I will say that demand is less.
Okay. Okay. So, Mr. Garg, coming back to the comment that you previously made that China has increased prices of certain key starting materials, will that impact you as a company? And if yes, what would the impact on margins be? How much do you source from China for your raw material sourcing?
See, as far as our two main products are concerned, from where 90% of revenue is coming, I'm talking about ibuprofen and ethyl acetate. There, in these two molecules, there is no impact because we generally have long-term contracts with the Chinese companies. But for our new molecules, yes, problem is there, like metformin. The major DCDA is the molecule which we import from China. They have increased the prices to the tune of, you can say, 15 to 20%. But since all the companies are importing this material and we have, or all the other companies has 2 months booking or pipeline material coming in, so we will be able to translate this to the end users, so to the formulation companies. I don't think so there will be any impact of this increase will be there on the long term basis, on the profitability, overall profitability of the company.
Yes, Mr. Garg, two-part question. First, what are the ibuprofen prices right now? You did say that the shortage has led to a spike in those prices. And do you maintain your 20 to 25% growth rate this year, or you can do better, since you said the other quarters will be better than quarter one?
See, definitely all the 3 quarters, quarter 2, 3, 4 will be better than what we did in quarter 1. So with this, we'll be able to sustain at 20 to 25% this year, which I spoke to CNBC in past as well. So on the second part of your question, our prices of ibuprofen in domestic as well as international market are quite sustainable. So with the start of BASF, whatever shortfall was there, that was covered. But overall, if I see market demand and supply, there is a gap. So that way we are able to sustain the prices of, you can say, $15+, $15 to $16. We this year, this complete year, will be able to sustain on these numbers.
Okay, and you did say, if I missed it, that the guidance stays at 20 to 25% growth this year.
Yes, definitely.
Okay. All right. Mr. Garg, thanks a lot for joining us and giving us all those details and outlook for the company. So that's the word coming in from IOL Chemicals, but it's time to slip into a break. And before we head into a break, here's something.